Hello traders, my name is Frank Paul, host and developer. I'd like to welcome you to FX Systems Lab Monthly, a completely unique trading education service designed to turbocharge your mastery of the markets, expose you to new techniques you may not have seen before, and stimulate your thinking about the process of finding and taking trades. My hope is that you will benefit immensely from this series of 12 trading systems that we will be publishing on a monthly rotation from now through to this time next year. I just wanted to begin by giving you an idea what to expect over the next 12 months. This is obviously month number 1 in our rotation of monthly trading system concepts. And we've got the first half of the year summarized here. It's presently June 2012, and we're bringing you course number 1, the 3-screen MACD histogram trade. This scalable trading method involves finding the same type of MACD histogram reading on 3 consecutive time frames, either bullish or bearish, then drilling down to the next lower for a fractal continuation pattern denoted by the MACD histogram on that time frame resolving to trend after a specifically counter-trend reading. In July, we'll bring you a related trading method, the 3-screened paired EMA trade, EMA obviously for exponential moving average, with evidence of either bullish or bearish gap and angle readings on a 10-20 paired EMA configuration plotted on 3 consecutive scalable time frames. We'll drill down to the next lower for evidence of a specifically corrective EMA reading there, trading in the direction of the higher level trend once a specific type of identified crossover event occurs. Then in August, we'll talk about the directional movement trade. This also scalable method is based on the directional movement indicator used in conjunction with market flow. We consider a long bias when the DI plus line crosses over the DI minus with ADX rising, or a short bias based on DI minus crossing below DI plus with ADX falling, and then drill down to the next lower time frame to replicate the analysis for a potential fractal entry setup. In September, we'll bring you the London Open day trade. The time frame spanning anywhere after midnight GMT up to the London Open at about 8 a.m. GMT provides an excellent vantage point to determine the tradable trend for the current 24-hour session, to set day trade take profit targets based on GMT pivots used in conjunction with the 5-day average daily range calculation, and most importantly of all, to exploit the highest volatility period of most trading days. In October, we'll talk about Elder's triple screen position trade. Dr. Alexander Elder describes an excellent top-down trading strategy in his book entitled Trading for a Living. In this course, we'll pay homage to Dr. Elder by explaining his strategy in detail, which looks to the weekly chart for a trend-following reading, the daily chart for an oscillator reading, and an intraday chart for buy-sell stops and trailing stops. In November, we'll turn our attention to the parabolic SAR scalping trade. This is a dead simple and effective way to align with momentum conveyed by the same parabolic SAR reading on each of the 4-hour, 60-minute, and 15-minute charts, drilling down to the 5-minute chart for a fractal retracement and its resolution to trend with a parabolic SAR reversal in the direction of the higher level momentum reading. This is a great way to exploit 20 pip limit exit opportunities repetitively throughout the trading week. And here is the course rotation summary for the back half of the year. In December, we'll show you the Williams EMA daily chart trade. This simplified position trading method involves attaining a clear gap and angle reading on a paired 10 and 20 EMA plot on the daily chart, then trading long or short when the Williams %R indicator crosses down through the -80 line when bearish, or up through the -20 line when bullish, and holding on to the trade until %R makes a crossover event at the opposite extreme. In January 2013, we'll bring you the 2-in-1 MACD trade. A 12-26 paired EMA can be applied alongside its namesake 12-26-9 MACD plot, which allows for contrarian histogram readings to be read as corrective as long as clear gap and angle reading is still present on the EMAs. Then, when the histogram reading realigns with trend, a continuation move is implied. This approach can be scaled up or down for any combination of time frames. In February next year, we'll talk about the rock and roll trade. ROC in capitals there stands for rate of change. The rock and roll indicator is a sophisticated histogram tool built from price rate of change and EMAs that provides 3 specific readings: bullish momentum, bearish momentum, and trade exit. On any one time frame, rock and roll provides good momentum and trade management signals, but when read across multiple consecutive time frames, its potential for well-timed entry points with limited risk is even better. In March, we'll discuss the pure price action trade, as I call it. Time to do away with indicators altogether and focus on just the core elements of price action: market flow, support, and resistance. In this course, we'll show you how to read the tradable trend based on swing point progressions, impulse waves, and retracements, and trade breakouts of support resistance with resting buy and sell stops. In April, we'll bring you the Members' Choice Contest winner. For the 3-month period December 2012 to February 2013 inclusive, we will be inviting our members to share their own personal favorite trading strategies not already covered here for a chance to be featured in the April 2013 monthly rotation and win a cash prize of $500. The chosen strategy will be presented by me on behalf of the winning contestant. We'll bring you more details in due course. Then finally, in May 2013, we'll wrap up with a very exciting installment, the revised FX Engine trade. Forex Mentor's popular FX Engine strategy was originally developed as a rules-based mechanical position trading system for those wishing to hedge the markets. With subsequent changes in NFA regulations that specifically discourage hedging, many traders found they were unable to continue working with this system. However, we have found a way to take the hedging aspect out of the decision rules and to trade it on one side of the market only, using some simple and effective trend reading filters. The perfect system for those looking to replace discretionary trading with a purely mechanical approach. And there you have it, in a nutshell, a quick overview of all 12 installments in our year-long trading system rotation.